Hello, and welcome back to the podcast. Thank you very much for being here. Today, we have another great question from a client, and she wants to know when to take a loan, when to use cash, and what to use that loan for. So, this is also kind of a common question that I forgot about because people haven't asked about it lately. So here is, first of all, the moral of the story with these couple questions that I have gotten recently is that if you are thinking of a question that I have not answered, just text us or email us, and I am happy to answer the question. Because if you have it, chances are somebody else has it, or it was maybe a podcast I did 100 episodes ago, and we need to revisit it. So by all means, I love it that you guys are asking some questions. Okay, when to take a loan, when to use cash, and what to use that loan for. So it does not matter if you are farming or a business. When should I take a loan for the business? Should I use it for equipment in the business? Should I use it as a line of credit? Should I use it to buy a business? Should I use it to buy ground? This is the big thing to remember when asking this question is that it's one pool of money. You have one pool of money. It does not matter if that money is in savings, if it is in your cash value, if it's in an IRA, if it is in bonds, if it's in, it doesn't matter if it's in gold or silver. It doesn't matter if it's in a CD. It doesn't matter. It's one pool. So no matter what piece of the pool you have, you're still, if you take it out of one part, you're still going to have the same amount in that pool left, right? Doesn't matter where it's allocated. So let's just kind of go over a couple of the scenarios. Should I use it as a line of credit? Okay. Right now, lines of credit are about 9 to 10%. I've seen a couple of people that have them locked in at 7. And so there's that. What is your line of credit rate at? Doesn't matter if you have a business or if you are farming. What is your line of credit at? If that rate is really high, we may want to use the policy because the rate in the policy might be anywhere between 4.76 to 5. A little over 5, maybe 5.25. So that would be a less expensive interest rate. So it might make sense to use it as a line of credit. Do we need it for a piece of equipment? If the piece of equipment rate is 12%, then we may want to use it for the piece of equipment and borrow from the line of credit because it's a cheaper rate. Heck, maybe we can borrow from the line of credit to buy the piece of equipment even. It just depends what that scenario looks like. What if we have cash? Should we use cash as our line of credit instead of using the life insurance policy as the line of credit? Okay, if you use your cash as the line of credit, now we interrupted the growth on the cash. If we use the life insurance policy as a line of credit, we have to pay interest. So some people say, well, Mary Jo, why would I pay interest when I have cash in savings? True, 100% true. So now we have to look at, and the questions I'm going to ask are, if this money in savings is just sitting there, where did that come from? Why isn't that in your policy as premium? Was it a one-time lump sum? Is it consistently that we're making more money? If we're consistently making more money, then that should go in as premium. Because at the end of the day, if you borrow cash from the policy, you're going to have to pay interest. But if you use the cash from savings, you still have to pay interest, but back to your savings because you want to be an honest banker, right? So I want you to pay that back to savings plus interest. It's just that you're going to have more to put in a policy when you start a new policy because we have all this money in savings. I'm going to assume that that is going to be there because business is well and we're making more money. And so in that scenario, it doesn't really matter where you take it from. If it were me personally, it would depend on how much it was. I may use the cash and pay myself back because why would I pay interest to the insurance company? Because it's the same pool of money. If I'm going to pay myself back plus interest, I'm good. But I have to do that. If I'm not going to do that, then I may as well take the loan from the policy because that's going to keep me honest and make sure that that cash on hand and savings gets put into a policy as premium. Because we remember, we make money paying premium. We don't make money taking loans. Should I use the cash value to buy a piece of equipment, or should I use cash to buy a piece of equipment? Again, exact same scenario. It doesn't matter because it's one pool of money. One of them you have to pay interest on, the other one you do not. But if you use the cash, again, are you going to be honest and pay it back? Either way, you leave liquidity on one side or the other to have access to money to use it. Now, if we have to choose because we have limited money, like I was saying earlier, we have limited money and we don't know which way to go, then use it for the thing that's either highest interest or the thing that the bank won't lend you money on. So sometimes I have people that have a business that the bank just doesn't understand, right? They don't understand horses. They don't understand goats and sheep. They don't understand CBD oil. They may not understand a network marketing business. They may not want to give you money because you're a business startup. If they don't want to give you money for those things, then go to the policy to use that. Don't go to the bank to get a loan because they're not going to give you one anyway. So if we're going to use all of our money from the policy and borrow for a thing like a vehicle that they will give us a loan for, then 3 months later, we need that money to start a business, buy sheep, buy cattle, do something that they won't give us money for. We'd have been better off using the bank for the loan on the vehicle, right? So we kind of have to think long term about what are we doing. So if we don't have money in savings, if it's not a cash versus policy, if it's just a what do I use it for because I have it, what are we doing in the future or wanting to do in the future that the bank may not want to give us money for, that we should leave the liquid money in the policy and then go to the bank for that loan? Now, I feel like I was a little all over there because I was a little bit all over, I'm sure. That's just how I am. So I hope that answered the question, but I get that question a lot. Mary Jo, what should I use my money for? And I start asking all these questions. Well, what else are you going to be buying? What else are you going to do? Are there other opportunities? How much money do you have in savings? All the things. Because if we have this other money, or if the bank will give us money for a vehicle or cattle, or maybe we're, buying a camper or something like that, they'll give you money all day long because that's a good collateral assignment for them. They're okay having something they can repo. They're not okay having things that they don't necessarily understand or that typically don't have good cash flow to them. Like they don't want to lend you money to start a business. They don't want to lend you money to pay down a credit card because there's nothing that they can have for collateral. Then we want to go to the policy for those things because they're going to allow you an opportunity where the bank would not allow that opportunity. So when do I use cash versus the policy is a whole different thing of what do I use the policy for and decide to use it for. Now, interest rates are unbelievably high, like I said. So operating people are using that for operating notes. They're using it for down payments on mortgages. No, they're using it for vehicles. We just bought a new vehicle and I used the cash value because nobody could beat the loan rate in the policy. I typically would not do that. I would never buy a vehicle through my policy with a low interest rate at the bank. But I did it this time because I also don't have a lot of things that I foresee coming up in the future where I'm going to need access to all that money. By the time I do, I foresee that that loan is going to be repaid and it's all going to be good. But if I saw something in the next 3 to 4 years, like, okay, we really want to do these things, then I may have even paid a little bit higher interest rate than what the policy was. But right now, the interest rates on those vehicles are 2, sometimes 3% higher than what the policy loan is. No thanks. I'll take a policy loan. And then if rates come down, I can refinance the vehicle and get my cash out of it and get that back into savings so I can start doing some of those things if they should arise. But until now, I'm good doing it that way. So it really do think about, what do we have to do in the future? Where am I going to maybe need that money versus what if I have, like, what are we doing? Is it cash versus policy loans? Or what are we doing today? Short term, all that kind of stuff. So I hope that helped, but it was a fantastic question. As always, let me know if you guys have more of these. Again, if you're thinking it, chances are somebody else is thinking it. And I appreciate the feedback. I appreciate the suggestions. Let me know if you have more. maryjo@withoutthebank.com. If you have not gotten the book, please go grab the book, schedule your appointment. Happy to meet with you. And then we can figure out how this can work for you. And if it doesn't, I'll let you know that too. Okay, talk to you guys later. Have a fantastic rest of your day.